So January was a bit of a month of two halves. At the start of the year, we saw stronger economic performance translating into a good result from equity markets. Fixed income markets were a little bit weaker as bond yields rose. Towards the end of the month, though, we've begun to see increasing concerns among equity market participants that higher interest rates in the future will have a negative impact on equity valuations. The data so far doesn't really support this. The results from the fourth quarter of 2017 in general have been a little bit better than expected, but markets are forward-looking, and equity market participants in particular are thinking about the impact of higher interest rates on valuations and corporate profitability in the future. So when we think about monetary policy in 2018, the message is very much one of gradual normalization. After a period of extremely low interest rates since the financial crisis, central banks appear keen to begin to raise interest rates and remove some of the liquidity that they've provided. The speed of that is very much up for debate. And when we look at the US particularly, some of the recent data suggests that the central bank may move a little bit quicker than market participants had thought. For instance, we saw wage growth in the US at the highest level over the last 5 years, and that has led market participants maybe to think about a slightly steeper trajectory of interest rate increases than they'd previously thought. When you see market volatility pick up, it's always tempting to ask whether it means something more, and our view here is no. The underlying economic environment still remains pretty good, inflation is relatively low, central banks will tighten monetary policy, but at a very gradual pace, and keeping an eye very clearly on the economic recovery that we've begun to see. It's also worth remembering that 2017 was a very unusual year, particularly in equity markets, with market volatility extremely low. That's not been the historical norm. So going forward, we should think in terms of volatility picking up a little bit, even if the underlying trend is still broadly positive.